Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad and today is Wednesday, December 17, 2008. We begin in the UK, where the number of people receiving jobless benefits rose by 75,700 in November, the fastest rise in unemployment since 1991. That brings the total people on the benefit rolls to 1.07 million, the highest level since July of 2000. Estimates are for a 45,000 increase, far below where the actual data came in. The Bank of England cut rates aggressively in its last meeting to 2% in an attempt to bolster the economy, which is being ravaged by a recession. Today's minutes from the Bank of England revealed that members voted unanimously for that 100 basis point cut this month. Though they seemed open to the idea of an even bigger cut, there was worry over how the currency markets and financial markets would react to such a move. It could have resulted in an excessive drop in the pound and undermined confidence in the economy. In a third release, UK retailers recorded their 9th consecutive month of falling sales during the early build-up to Christmas. A net balance of 55% more retailers said sales were worse compared to a year ago than those that said sales were better. That is the weakest level on record since the survey began in 1983. The pound-dollar pair, which had been surging the last two sessions, hit a high near 1.5720 prior to the UK employment release. It then proceeded to fall more than 420 pips to find support at 1.5240. Some of those losses were pared down in the New York session. The euro pound jumped 290 pips to set a fresh record high at 0.9325. The Bank of England seems most likely to follow the Fed's lead in continuing to cut rates while the ECB sounds more hawkish. Therefore, the pound is being sold against the euro by traders who see the potential for future aggressive policy moves from the UK. The final version of Eurozone consumer prices for November matched the preliminary release from a couple of weeks ago. Since the preliminary release, the ECB cut its benchmark interest rate by 75 more basis points to bring the rate to 2.5%. Yesterday, though, ECB President Trichet said that there's a limit to how far the bank can keep cutting rates, striking a hawkish tone and giving the euro extra strength in currency markets following the Fed's move to a near-zero interest rate policy. In the US, the current account deficit narrowed more than forecast in the third quarter to $174.1 billion. The main reason for the jump was an improvement in exports and a decrease in foreign earnings on American assets. The euro-dollar pair roared to another huge gain today, climbing to an intraday high near 1.4437, which extends yesterday's rally to 700 pips. After the move to an almost zero interest rate policy by the Fed and growing concerns over the U.S. rising budget deficit, the dollar has lost its appeal as a safe haven amid the financial crisis. The euro seems to be taking this mantle, and that has been reflected in the price action seen the past few weeks. The dollar-yen pair, meanwhile, hit a fresh 13-year low at 87.12, which puts the dollar about 21% down on the year versus the yen. Japan's Prime Minister Nakagawa said the government is ready to step in and intervene in the currency markets in order to help exports, which are being hurt by a strong yen. The dollar-Swiss franc pair fell 450 points today, extending the franc's gains against the dollar to almost 1,000 this week. As the dollar loses its allure as a safe haven, the yen and franc will take back that role and is doing so in a strong fashion. Against the euro, the franc gained almost 300 pips as well. In our last fundamental release of the day, Canadian wholesale sales fell 1.8% in October as the auto sector and metals industries were weak. In terms of the volume of sales, which take price fluctuations into account, wholesale sales were down 3.6%. This is a negative sign for the Canadian economy, which has been coming under more strain recently as a result of its own recession. Looking ahead to overnight, Switzerland will release data on trade and retail sales. Germany will post its IFO Business Climate Index. The UK will reveal its retail sales along with government spending, and the Eurozone will post its trade balance. Tomorrow, the US will post weekly jobless claims, the Philly Fed Index, and its leading indicators. Canada will release retail sales, its leading index, and a measure of money flows into and out of the country. And that will wrap up our broadcast today. Thank you for joining us here at cmsfx.com, and happy trading.